So there was a comment that I saw that actually inspired this video. I think this is a very good discussion to have because some people don't think that institutional money is in fact good for crypto. This comment was basically talking about the fact that institutional money is basically money that's not hitting crypto DeFi products and promoting that. And I understand that. And what people need to know is that institutional money was never going to hit DeFi products anyways. Most institutional players, they want nothing to do with self-custody. They don't want anything to do with DeFi protocols. They look at crypto as purely an investment. And that's fine. You need those people in the space, right? That's how you continue to grow. But the best way I can describe institutional money, it's like throwing gas on a fire. It's an accelerant, okay? And why I say that is look at what's happened early on this year. This fire was starting to grow in terms of crypto. We were getting towards this time of basically mass adoption. All right, 5% of the world at I believe, the start of the bear market cycle. We've grown to over 6% now. And a big part of that, I believe, has to do with institutional money creating some of these bigger optics. Now, why I say that is look at what's happened in terms of the price of BTC. We actually got to this point where we hit a new all-time high before the halving. Never happened historically, guys. All right. We've never done that before. We've never got even close. Typically does not happen until all the way late in the year of the halving or the start of the following year. BTC usually hits a new high before the end of the year of the halving, just FYI. Now, the big reason why I say this is an accelerant for adoption is look at what retail money did early on. Normally, we don't get that big burst of new retail money until later on in the year of the halving as well, when things are starting to flow in terms of BTC, when you get close to all-time highs. But we had a big burst of it back in March. We saw coins throughout the space take off, many of them doing, 3 to 10x, right? And that was just, it was a common thing. You could throw money at anything at that point and basically do that. Now, the thing is things have kind of slowed down a little bit, right? Institutional money hasn't been buying at as big of a rate. And there's a reason why, right? You don't just continue to pump money in, pump money in, pump money in. You got to take times to cool things down and accumulate behind the scenes. Now, institutional money can't really accumulate behind the scenes because they have to disclose this, but we're now also waiting for further institutional money to hit this space from Ethereum spot ETFs, okay? So this is going to start accelerating in an even bigger way as we get deeper into the bull market cycle. People need to understand and remember that institutional money, this first wave of it, it was the test. It was the toes in the sand, or the toes in the water, right? There will be more Bitcoin spot ETF products that are launched. We're seeing them happen worldwide. There will likely be more that come here in the US as well. Further institutions right now, there's a bunch of them that aren't touching it currently. Well, when there's money to be made, they're going to come into the space. Some of them, they have to wait a certain period of time. It's typically 6 months from these approvals at least in order for them to be able to launch a spot ETF product. People seem to forget that. Ethereum spot ETF, same thing. We're going to see the same kind of wave build. So basically, once we get into 2025, this landscape of institutional money is going to look very, very different. Now, why this is an accelerant is they are going to push for adoption. They're going to push to try to increase their bags. We're starting to see advertising in billboards, all over the place, digital billboards, right? We're starting to see advertising. I've seen a bunch on Amazon Prime Video. It's getting in the face of the masses. It's the reason why we very quickly went from, 5.25% to now 6.8% of the world or 6.4% or whatever it was, right? It was a switch. It flipped. And you saw this big burst of retail onboarding. That is only going to accelerate and move even faster as prices are wild, as institutions are pushing more, as enterprises are adopting. Believe it or not, institutional money is actually kind of your friend. And there's one last big way I want to tell you guys, and see people, I think, are forgetting this. They say institutional money has a big impact on the industry right now, and it does. Okay, we know that when GBTC is dumped and sold, like when Grayscale is selling Bitcoin, we know it usually affects the market sometime between 9 to 11 a.m. Central Standard Time. That seems to be their time frame where they dump. But when you have these big spot ETF products, these aren't derivatives. They need to hold the underlying asset. What that means is that all this Bitcoin that is being removed, all these assets that are being removed from the space are likely to be held for a very long period of time. Yes, they may buy and sell some here and there, right? But as their spot ETF products grow, as there's more money that gets into these institutional players, they have to continue accumulating and frankly have to hold. Okay. It has to do with share prices. It has to do with what their holders are doing. There's a lot of different dynamics that weigh into it, right? But at the same time, we're looking at billions and billions and billions of dollars that can't just be instantly dumped in the market. Okay. And right now it kind of pales in comparison to the trillions of dollars that will be coming into the crypto market over time, not just from institutional money, but from retail as well. This thing is going to build into this insane animal that people can't fathom. And that's why I'm so bullish on the market and have been. I've said that, we're likely to have a super cycle. We're likely to have blow off tops. This cycle and next cycle are likely to be the two fastest growing cycles in crypto history, right? We're likely to go all the way up to somewhere between 10 to 12 trillion dollars in terms of the global market cap of crypto by the end of 2025. And by the end of 2029, following cycle, somewhere around 100 trillion. Really think about that. And right now we sit at what, 2.5 or whatever, 2.6 maybe, 2.4. Okay. We're basically a 40x away from where this crypto market is headed over the next 5 years. Really think about that. Now, as always, this is not financial advice. You guys can obviously do what you want, take that however you want, but know that we're still in the infancy stage. We're still in that phase where people are kind of figuring things out. Institutional money is figuring things out, but you can't squash what is coming. It's already started. So appreciate you guys as always. Hopefully you enjoyed the video. Hopefully that makes a lot of sense for people. If you have questions, obviously ask, but have a great day. Catch you guys in the next one. Take care.